Digital assets are increasingly prevalent across diverse sectors. These sectors include art, finance, entertainment, and real estate. Digital assets are becoming an integral part of everyday life. This transformation is driven by the unique properties of digital assets. These properties include their programmability, scarcity, and global accessibility. The adoption of digital assets is reshaping traditional business models. By 2025, digital assets are expected to see widespread integration across various sectors. A significant majority of major institutions are projected to actively engage with digital assets. Millions of creators are also anticipated to participate in the digital asset space. This widespread adoption indicates a growing recognition of the value and potential of digital assets. The projected engagement signals a shift towards incorporating digital assets into mainstream financial and creative activities. Digital assets extend beyond cryptocurrencies like Bitcoin and Ethereum. They include a diverse array of applications and asset types. Fractionalized real estate represents one such application. Collectibles, such as rare digital art or memorabilia, are also considered digital assets. Additionally, royalties, representing rights to income streams, can be digitized and traded as digital assets. By 2030, a significant portion of global funds is projected to be invested in digital assets. This shift indicates a growing acceptance and integration of digital assets into mainstream finance. Increased allocation to digital assets is expected to enhance market accessibility. Liquidity within the digital asset market is also anticipated to improve substantially. Transparency in digital asset transactions and holdings will likely see advancements. These factors collectively contribute to the maturation and stability of the digital asset ecosystem. The digital asset space is experiencing continuous expansion and innovation. Emerging platforms are playing a key role in this evolution. Online communities are fostering collaboration and knowledge sharing. Technological advancements are further driving accessibility and utility. These factors collectively reduce barriers to entry and broaden the scope of digital assets. NFTs enable musicians to secure funding for their projects. NFTs facilitate direct connections between musicians and global collaborators. Digital assets empower creators by providing new revenue streams. Musicians can use NFTs to fund studio recordings and productions. NFTs offer musicians greater control over their creative output and distribution. A farmer in Nairobi uses tokenization to represent ownership of farmland. Tokenization allows the farmer to divide the farmland into smaller, investable units. Neighbors can acquire tokens, giving them a stake in the farm's harvest. Token holders receive a share of the profits generated from the farm's produce. This community-based approach empowers local residents through shared ownership and economic participation. Teachers in Argentina are leveraging DeFi lending pools. DeFi lending pools provide an avenue for generating additional income. This income supplements their primary earnings as educators. DeFi, or decentralized finance, offers financial tools outside traditional systems. Digital assets facilitate participation in these DeFi lending pools. This highlights the practical financial benefits of digital assets for individuals. Students in Mumbai are utilizing fan tokens for crowdfunding tuition fees. Fan tokens are digital assets that provide holders with certain benefits. These benefits can include voting rights, exclusive content, or access to events. This initiative demonstrates a novel approach to educational funding using digital assets. Decentralized autonomous organizations, DAOs, are emerging as tools for community empowerment. Communities are utilizing DAOs to organize and manage local projects. DAO structures enable community members to vote on project proposals. This voting process facilitates decentralized governance within the community. The use of DAOs demonstrates the potential for more democratic and community-led initiatives. Key institutions are increasingly engaging with digital assets. This involvement includes the use of spot ETFs to gain exposure. Regulatory reforms are facilitating greater institutional participation. Tokenization frameworks are also enabling new forms of asset management. The applications of digital assets are continuously evolving and expanding. These new applications span various sectors, demonstrating the versatility of digital assets. One emerging use case is the tokenization of insurance policies. Digital assets are also being utilized to enhance logistics and supply chain management. Cross-chain royalties, facilitating payments across different blockchain networks, are another application. Sustainable impact bonds, which fund environmentally and socially responsible projects, represent a further innovative use. Early adoption of digital assets presents a dual nature of potential rewards and inherent risks. The possibility of higher returns often attracts early adopters to novel digital assets. However, this eagerness must be tempered with an understanding of the elevated risks involved. Informed participation is crucial to navigate the complexities and uncertainties associated with emerging digital assets. To begin, it's essential to download a secure wallet. Secure wallets are designed to protect your digital assets. Popular options include MetaMask, Ledger, and Coinbase Wallet. These wallets allow you to maintain control over your digital assets. This ensures that only you have access to your funds. Choose a wallet that best suits your security needs. Begin by exploring various blockchain platforms to identify potential opportunities. Ethereum is a leading platform known for its smart contract capabilities and a wide array of decentralized applications. Pulsechain offers an alternative ecosystem with a focus on energy efficiency and faster transaction speeds. Solana provides high throughput and low transaction costs, making it suitable for scalable applications. Investigate active projects on each platform to understand their functionalities and user engagement. Assess user growth metrics to gauge the popularity and potential of projects within these ecosystems. Engage with the digital asset community through platforms like Discord and Telegram. These groups offer access to how-to guides for navigating digital assets. Find inspiration from other community members' experiences and projects. Connect with individuals who share similar interests in the digital asset space. These connections can provide support and foster collaboration within the community. Hands-on experience is crucial for understanding blockchain technology. Minting an NFT provides practical insight into token creation and ownership. Buying a tokenized asset demonstrates real-world blockchain applications. Lending in a DeFi pool offers first-hand knowledge of decentralized finance mechanisms. Share your experiences with digital assets. Help others learn about digital assets through your shared knowledge. Amplify the value of digital assets by sharing insights. Connect with global networks to expand the reach of your knowledge. Contribute to a community-driven understanding of digital assets. Digital assets enable artists to showcase their work on a much larger scale. Artists can display their creations on thousands of screens simultaneously. This expanded reach significantly increases the potential audience. The increased visibility enhances the artist's overall impact. Digital platforms provide new avenues for artistic expression and distribution. Artists can connect with a global audience through digital asset displays. Digital assets can be leveraged to foster community wealth creation. This model allows communities to collectively benefit from shared resources. The farmer example illustrates how digital assets can enable this communal wealth. This approach promotes shared ownership and economic empowerment within the community. Digital assets facilitate new models for distributing wealth and resources more equitably. Digital assets enable individual participation in decentralized governance. This participation is primarily facilitated through decentralized autonomous organizations, DAOs. DAOs empower individuals to influence decision-making processes. A key area of influence is local funding decisions. Digital assets grant voting rights or governance tokens within these DAOs. This allows for a more democratic and community-driven approach to resource allocation. Digital assets are reshaping daily life by creating new avenues for micro-entrepreneurs. These assets enable individuals to start and scale small businesses more efficiently. Digital platforms provide access to wider markets and diverse customer bases. Digital assets also enhance savings opportunities for individuals. They offer alternative investment options beyond traditional savings accounts. This diversification can potentially lead to increased financial security and growth. Supportive platforms are enabling individuals to engage with digital assets. These platforms provide resources for learning about digital assets. Individuals can experiment with digital assets in a controlled environment. This experimentation fosters a deeper understanding of the digital asset space. Communities within these platforms empower users to discover new opportunities. A secure wallet is essential for managing digital assets. Download a wallet to safely store your digital assets. The wallet enables secure transactions with digital assets. It provides a user-friendly interface for managing your portfolio. Ensure the wallet supports the specific digital assets you intend to use. Start your digital asset journey by downloading a secure wallet today. Platform exploration is crucial for identifying opportunities within the digital asset space. Key platforms provide access to various digital assets and related services. Engagement with these platforms facilitates participation in the digital asset ecosystem. Effective exploration leads to informed decisions and strategic involvement in digital assets. Engage with online forums to connect with peers. Forums provide platforms for collaborative learning. Sharing experiences enhances collective knowledge. Community interaction fosters mutual support. Active participation amplifies learning opportunities. Contribute insights to benefit fellow members. Initiate your engagement with digital assets to foster a practical understanding. Taking the first step is essential for gaining hands-on experience. This initial action marks the beginning of your transformation in the digital space. Active participation is key to unlocking the potential of digital assets. Practical experience builds confidence and competence. Embark on your digital asset journey today. Web3 and digital assets are transforming traditional concepts of access. These technologies are creating new opportunities for individuals and organizations. This transformation is facilitated through innovative transaction methods. Web3 enables new forms of collaboration, breaking down traditional barriers. Digital assets empower individuals to share their personal stories and experiences in novel ways. The digital asset revolution is rapidly transforming the financial landscape. Active participation allows individuals to engage directly with emerging technologies. Becoming involved offers the potential to contribute to and benefit from future innovations. Early engagement can position participants to capitalize on the next wave of success stories. This proactive approach enables individuals to shape their financial future. Participating now means becoming part of the headline as the digital asset space evolves. Tokenized securities represent traditional assets on a blockchain. Traditional assets, such as stocks and bonds, can be digitally represented. These digital representations are created as tokens on a blockchain network. Tokenization allows for fractional ownership of assets. Blockchain technology ensures transparency and security in asset management. Tokenized securities can streamline trading and settlement processes. Utility tokens are a type of digital asset within a blockchain ecosystem. These tokens grant users access to a specific product or service. The utility is inherent in the token's function within the platform. Holding the token is often required to utilize certain features. This contrasts with security tokens, which represent ownership or investment. Governance tokens are a type of digital asset within a blockchain ecosystem. These tokens grant holders the right to participate in decision-making processes. Holders can vote on proposals related to project development and management. This voting mechanism allows for decentralized governance and community involvement. Blockchain technology employs a decentralized architecture for data management. Data is distributed across a network of computers, rather than stored in a central repository. Each computer in the network holds a copy of the blockchain. This distribution reduces the risk of single points of failure and data manipulation. Decentralization enhances security and transparency compared to traditional centralized systems. Blockchain immutability ensures that once data is recorded, it cannot be altered or deleted. Each block contains a cryptographic hash of the previous block, forming a chain. Any alteration to a block would change its hash, invalidating all subsequent blocks. This makes tampering with the blockchain computationally infeasible. Immutability enhances transparency and trust in blockchain systems. Smart contracts are self-executing agreements written into code on a blockchain. They automatically enforce the terms of a contract when predefined conditions are met. This automation eliminates the need for intermediaries, such as lawyers or escrow services. Smart contracts enhance efficiency, reduce costs, and increase transparency in various processes. DeFi platforms enable lending and borrowing of digital assets. These platforms operate without the need for traditional financial intermediaries. Users can directly lend their crypto assets to others. Borrowers can access crypto loans by providing collateral. Interest rates are typically determined by supply and demand dynamics. Smart contracts automate the lending and borrowing process. Yield farming is a method to generate rewards with cryptocurrency holdings. It involves staking or lending digital assets on DeFi platforms. Users provide liquidity to decentralized exchanges or lending protocols. In return, they earn rewards in the form of additional tokens. These rewards can come from transaction fees or interest payments. Yield farming aims to maximize returns by actively managing crypto assets. Decentralized exchanges, DEXs, facilitate peer-to-peer trading of digital assets. DEXs operate without central intermediaries like traditional exchanges. Users directly control their funds and execute trades via smart contracts. This direct interaction enhances security and reduces counterparty risk. DEXs promote transparency as all transactions are recorded on the blockchain. Users benefit from increased privacy and autonomy over their trading activities. NFTs enable artists to tokenize their digital artwork. Tokenization transforms digital art into unique, verifiable assets on a blockchain. This process allows artists to sell their work directly to collectors. NFTs provide proof of ownership and authenticity for digital art. This ensures that the artwork is original and that the buyer has legitimate ownership. NFTs are used to represent unique digital collectibles. These collectibles can include items like digital trading cards. NFTs can also represent virtual items within online games or virtual worlds. The uniqueness of each NFT ensures verifiable ownership and scarcity of the digital collectible. NFTs are used in gaming to represent unique digital assets. These assets can include in-game items like weapons, skins, or consumables. NFTs can also represent characters with unique abilities or traits. Virtual land ownership within a game is another common application of NFTs. This integration allows players true ownership and control over their digital assets. Securing digital wallets is crucial for protecting digital assets. Employing strong, unique passwords is a fundamental security measure. Two-factor authentication, 2FA, adds an extra layer of protection. 2FA requires a second verification method in addition to the password. These practices significantly reduce the risk of unauthorized access to digital wallets. Phishing scams are a significant threat to digital asset holders. Education is crucial to identify and avoid these scams. Awareness training helps users recognize deceptive tactics. Vigilance protects digital assets from unauthorized access. Smart contract audits are crucial for identifying vulnerabilities in code. These audits help prevent potential exploits and financial losses. Audits involve a thorough review of the smart contract's code and logic. The goal is to ensure the contract functions as intended and is secure. Regular audits are essential for maintaining the integrity of blockchain applications. Different countries are adopting varied approaches to regulating digital assets. These regulations address blockchain technology and its applications. The regulatory landscape is diverse, ranging from permissive to restrictive. Some jurisdictions focus on consumer protection and financial stability. Other regions prioritize innovation and technological development in the digital asset space. Compliance with digital asset regulations is crucial for legal operation. Key regulations include Know Your Customer, KYC, protocols, anti-money laundering, AML, requirements are also essential. Adherence to these standards prevents illicit activities and ensures market integrity. Institutional investors and corporations are increasingly adopting digital assets. This trend marks a significant shift in the perception and integration of digital assets. Institutional adoption brings increased legitimacy and stability to the digital asset market. Corporations are exploring digital assets for treasury management and investment diversification. Increased institutional participation can lead to greater market liquidity and efficiency. Regulatory clarity and institutional-grade infrastructure are key drivers of this adoption. Digital assets are increasingly integrated into metaverse platforms. This integration aims to create functional virtual economies within these digital worlds. Users can obtain, trade, and use digital assets for various purposes. These assets often represent virtual land, items, avatars, or currencies. Blockchain technology ensures the scarcity and ownership of these digital items. This integration allows for new forms of commerce, entertainment, and social interaction. Central banks worldwide are actively researching and experimenting with central bank digital currencies, CBDCs. CBDCs represent a digital form of a country's fiat currency, issued and regulated by the central bank. The exploration of CBDCs aims to modernize payment systems and enhance financial inclusion. CBDCs could potentially streamline cross-border payments and reduce transaction costs. However, central banks are carefully considering the implications for monetary policy and financial stability. Viewers are encouraged to remain up to date with the latest advancements in the digital asset space. Continuous learning is essential for understanding the evolving landscape of digital assets. Staying informed helps in making educated decisions regarding digital assets. Ongoing education ensures a comprehensive grasp of new developments and opportunities.